You check your credit score for the first time, and there isn't one. Not a bad number. No number at all. No credit history. The specific kind of blank that makes renting an apartment, financing a car, or even getting a phone plan without a deposit feel impossible. This is where almost everyone starts. Here's exactly what to do about it day by day. Days 1 to 7. Understand what you're actually building. A credit score isn't one number controlled by one company. Two major scoring models, FICO and VantageScore, pull data from 3 credit bureaus, Equifax, Experian, and TransUnion. Your score is built from 5 factors: payment history 35, amounts owed 30, length of credit history 15, credit mix 10, and new credit 10. With 0 credit history, you have no data in any of these categories. That's not a bad score. It's an absence of one. The first goal of these 90 days isn't a high score. It's simply getting something reported to the bureaus that you can then build on. Pull your credit reports for free at annualcreditreport.com, the only site authorized by federal law to provide them at no cost. Confirm you genuinely have no file or a thin one. This tells you exactly where you're starting. Days 8 to 14, open a secure credit card. This is the single most reliable tool for building credit from zero. A secured card requires a refundable deposit, often $200 to $500, which becomes your credit limit. You use it like a normal credit card. The issuer reports your activity to the bureaus every month, exactly like an unsecured card. Look for a secured card with no annual fee and one that reports to all 3 bureaus. Not all of them do. Many major banks and credit unions offer these. Discover, Capital One, and various credit unions are common starting points. Apply and fund the deposit this week so the account has maximum time to season over the next 90 days. Days 15 to 21. Consider becoming an authorized user. If a parent, spouse, or close family member has a credit card in good standing, low utilization, years of on-time payments, ask if they'll add you as an authorized user. You don't need to ever use the card. Some issuers report the entire account history to your credit file the moment you're added, which can instantly give you years of positive history by association. This only helps if the primary cardholder's account is genuinely healthy. An authorized user account with high utilization or missed payments can hurt you just as easily as it can help. Ask directly about their payment history before agreeing to this step. Days 22 to 30. Set up a credit builder loan, optional but powerful. Many credit unions and online lenders offer credit builder loans specifically designed for this exact situation. The mechanic is unusual. Instead of receiving the loan amount up front, it sits in a locked savings account while you make monthly payments toward it. Once you've paid it off, you receive the funds, and the on-time payments are reported to the bureaus the entire time. Loan amounts are typically small, $300 to $1,000, with monthly payments in the $25 to $50 range. This isn't free money. You're paying interest to build a payment history, but it adds a second, different type of credit account to your file: installment credit, versus the revolving credit of a card, which factors into the credit mix portion of your score. Days 31 to 45. Make your first payments and pay in full. By now, your secured card and/or credit builder loan should be active. This phase is about the single habit that outweighs everything else: paying on time, every time, without exception. Payment history is 35 of your score, more than any other factor. Set up auto-pay for at least the minimum due immediately, so a missed payment is never possible due to forgetfulness. Then pay the full statement balance manually before the due date. This avoids interest charges entirely while still generating the on-time payment history that builds your score. Keep your utilization, the percentage of your credit limit you're using, under 30 and ideally under 10 when your statement closes each month. If your secured card has a 300 limit, try to keep your balance under 30 at statement close, even if you pay it off in full afterward. The bureaus see the statement balance, not your day-to-day spending. Days 46 to 60. Let the account season. Don't apply for anything new yet. This stretch is about patience, not action. Every new credit application generates a hard inquiry on your report, which can temporarily lower your score by a few points and signals to lenders that you may be seeking a lot of new credit at once. Applying for multiple cards or loans in this window works against you. Instead, use this time to check your credit reports again, this time looking specifically for whether your secured card and/or credit builder loan are actually appearing and reporting correctly. Errors happen. If an account isn't showing up by day 50 or so, contact the issuer directly. Sometimes there's a reporting delay of 1 billing cycle. This is also the point where your first FICO or VantageScore may become calculable. Most scoring models need at least 1 account reporting for roughly 1 billing cycle before they can generate a number at all. Don't be discouraged if the number is modest. A first score in the 580 to 650 range from a completely blank file is normal, not a failure. Days 61 to 75. Add a second positive account if you're ready. If your secured card payments have been consistent and your utilization has stayed low, this is a reasonable point to consider a second account. Either upgrading to a small, unsecured starter card if your issuer offers a graduation path, or opening a second secured card from a different issuer. The goal isn't to accumulate cards. It's to diversify slightly and demonstrate you can manage more than one account responsibly, which strengthens your file over time. If you're not confident you can manage a second account without missing a payment or running up a balance, skip this step entirely. One well-managed account beats two poorly managed ones every time. Days 76 to 85. Address any subscriptions or bills that could be reported. Some services, rent payment reporting platforms, certain phone carriers, and a small number of utility companies offer to report your on-time payments to the bureaus, sometimes for a small fee, sometimes for free. If you already pay rent or a phone bill reliably, this could be a low-effort way to add another positive data point to your file without opening any new credit. Not all landlords or providers participate, and third-party rent reporting services vary widely in cost and reliability. So this step is optional, worth investigating if it's available to you, not essential if it isn't. Days 86 to 90. Check your progress and set the next 90-day plan. By day 90, you should have at least one account reporting on-time payments for roughly 2 to 3 billing cycles, utilization kept consistently low, and no missed payments or new hard inquiries beyond your initial account openings. Pull your credit report and score again. A realistic outcome at this stage is a score somewhere in the low to mid 600s, sometimes higher depending on your specific accounts and payment consistency. Genuinely good progress from a completely blank file, though still below the good 670 or excellent 740 ranges that unlock the best rates and terms. The next 90 days matter just as much as these did. Keep paying in full and on time. Keep utilization low. Let the accounts age. Length of credit history is 15 of your score, and it only grows with time. No shortcut available. In 6 months to a year of this same consistent behavior, most people building from 0 C scores climb meaningfully into the good range and beyond.